proxy for a global risk sentiment. I think since Genius Act, there was a 50 billion flow of stablecoin to Ethereum, which was probably 10x more than the second largest competitor.
Prediction markets are a very big part of it is just investing in culture, and cultures are so vastly different from each other depending on the country. I'm pretty bullish on payment stacks working out well in the US. There is a bigger arbitrage opportunity every day from merchants all around the world.
Hello everyone, welcome to the OFR podcast. My name is Momir, I'm managing partner of IOSG Ventures, which is a crypto investment firm. OFR podcast is made by IOSG Ventures, and today I'm also co-hosting this episode with my colleague Joy. Hey Joy, welcome, and I'm glad we are experimenting on this format together.
Hello, yeah, thanks for having me. I'm Joey. I'm also part of IOSG, principal investor here, focusing most on the consumer side, but yeah, very excited to dive deeper into kind of how we view crypto markets today, 2025, 2026, and everything in between.
Yeah, I think today's episode obviously comes at the beginning of 2026, so it's also a good opportunity to reflect on what happened in 2025 and some expectations for this year. And I think we will try to cover a range of topics from short tail assets to altcoin market space to some of the winners of 2025, and dive a little bit deeper in some of the more niche topics like prediction markets, perpetual exchanges, and so on.
Yeah, I guess to begin with, I think something that we noticed in 2025 so far is the market structure has changed a little bit compared to before, and I think a lot of it has to do with just that's kind of driving liquidity into these tokens. But I'm curious as to how you think about just to start off the general macro trends and what we've been seeing in the market. It seems like there's been a lot of talks about that on Twitter and whatnot.
Yeah, I can start this off with some talk about the short tail assets. I think obviously starting from Bitcoin, it's hard to pretend that 2025 was great. It was somewhat disappointing, and I think that's especially true if you compare Bitcoin to some of the gold and silver rally, and while debasement trade is raging on, BTC has had a negative performance year on year, so that was quite disappointing, because a lot of the people have had expectation that with the debasement trade becoming more mainstream, this was a clear benefit for Bitcoin. But I think Bitcoin was trading more as a proxy for a global risk sentiment, and if you would try to basically think about the keywords for Bitcoin sentiment in 2025, I think some of the keywords were AI bubble, Bitcoin cycle, strategy, and if you want to make a little bit of a stretch, you can even say a quantum risk. And I think in all four, it was a negative connotation, and this was basically driving the mainstream discussion around Bitcoin, even though at some point the performance seemed to be very, very solid, 125K all-time high price. But then I think the AI bubble concerns and overall risk-off sentiment took control, and combined with a lot of persistent selling for people that believe in cycle theory, that led to quite disappointing performance overall for BTC. But I feel that AI bubble aside, I think it's very hard to discuss to what extent this is true or not true. I just think that it's also somewhat beyond our mandate to discuss this topic, but just to give some opinion, I feel if we compare this bubble to some of the previous tech bubbles, smart people started calling out .com bubble 3 to 4 years before it actually popped. So I do think that on the AI bubble side there is like probably still more room, but this fear is obviously like very realistic. Even though we have like the market reacting more in a more healthy way recently, like you can see that not all AI stocks are just performing well. It's actually recognizing the nuanced differences, who is well financed, who is not, who is taking too much, too large of a cake that they cannot deliver versus actually more realistic plans. So I think the market is more nuanced, and it's not this sort of like a bubble where everything that has AI label can win. So in that sense, it's not like a huge raging AI bubble that we can clearly identify. And then on the cycle theory, I think we can comment more specifically. I feel that it's actually the pattern that has been very strong. Like if you look into every 4-year end of the Q4 was actually the peak Bitcoin price, and I think just people were pattern matching, and so far they have always been right. So since last quarter they have been right too. So it's hard to argue against it, but I think that it's more of that there is no real causation to that end, and I think that it is actually the risk of the AI bubble and macro risk that is much more important in the overall picture than the bubble itself.
It feels like you're kind of like rejecting the idea of the Fourier cycle like super hard. Like you're kind of saying these people that believe in it or these people that subscribe to it, like as if you really feel like that's not the right way to think about things. Like what do you think makes it different structurally from previous cycles versus this year?
I think like actually even if you look into the previous cycle or actually every previous bubble top, it was happening in very good macro years. Like if you think, so usually people think about these cycles in terms of halving, right? So halving happens on every 4 years, and then 1 year post halving is when Bitcoin typically reaches like a new all-time high price. So in that sense, 2025, 2021, 2017, 2013, these were like the top of the cycle periods. And if you single out these years in terms of the macro performance overall and look into the S&P 500 performance in these years, it was like extraordinarily good, like probably maybe even 2x compared to the long-term average of the S&P annual performance. Like these years were extremely positive macro years. So I still feel that Bitcoin in that sense is like more trading like a macro asset rather than like having some sort of like endogenous cycle that is self-deterministic. And even last cycle, if you think comparing like Bitcoin to the hottest asset of the cycle at that time, that was Tesla, right? Like if you think about the time interval where Tesla and Bitcoin had like a bottom and top price, it was actually within 1 month that they both reached the high and low price. And this cycle, I think that's happening with Bitcoin and Nvidia. And Nvidia is still the asset of this cycle, and actually they reached the top price around the same time. It's probably like few days difference, but then AI bubble fears took over and Nvidia dropped 15%, but I think Bitcoin is a more risk-on asset, like naturally had like a higher drawdown. It is just that on top of that, when you add like a lot of the cycle fears, I think that further exaggerated the downtrend, and we had like a 30% drop. But I think for this to change going forward, like all that matters is like the 2026 performance. I think if a lot of these cycles get proven wrong in 2026, that the cycle theory is not correct, I think that could also have like a reflexive effect on the prices. So I feel overall for 2026 that BTC has been over-indexing on some of these risks. I think even from like AI bubble to cycle to even like strategy. I think strategy used to be like a bullish catalyst for Bitcoin, but 2025 it became more of a burden in terms of like market perception. Even like Michael Saylor, like he went up publicly to say that
he smells.
they are open to selling, right? So no more Bitcoin hodl forever. So that was kind of a big shift, and I think people just started to worry a lot about like whether MicroStrategy can keep holding BTC, and them communicating that they are open to selling. I think that was also a big concern, and they at the end of the year, I think they managed to secure enough cash to pay out the obligations to its creditors for the next 3 years. So I think that risk is definitely not going to materialize in 2026. So I think the MicroStrategy risk for that reason is also something that the market over-indexed on in last year. And quantum risk, I'm also not super certain, but I was also thinking like to what extent or how long would it take for quantum risk to become like a mainstream risk that people are discussing? And I feel like it maybe got into the mainstream discourse sooner than I expected. I even heard the quantum risk. What was that?
It started with Willow, like Google publishing that Willow paper, and then Bitcoin price just dumped immediately. I remember that day pretty clearly.
I'm not sure whether that was the clear catalyst, but I feel like a lot of the Bitcoin core community did a lot to educate people on this risk, and then some of them are really influential. They were able to bring this into the discourse, and I even heard quantum risk for Bitcoin being discussed on Tucker Carlson podcast. So I think that was like a sign that maybe this is already into the mainstream. So in that sense, having it into the mainstream sooner than expected might also suggest that the market has been over-indexing on these two. So I feel like the Bitcoin 2026, I to be honest, cannot identify too many of the positive idiosyncratic events for BTC, but I feel like the fact that BTC perception has been so much over-indexed on these risks, it's also potentially a positive catalyst if some of these risks prove out not to be realistic. Obviously, it all starts, and the most important factor is the AI stocks performance and how NVIDIA performs going forward, because it is still considered to be the asset of this cycle that sets the pace. Then the second thing, if the cycle theory gets proven to be wrong, with 80K being the some sort of a bottom for the next 18 months, I think that would be something that could persuade a lot of the cyclers that they got it wrong. And besides this, I think sailor risk or strategy risk is also unlikely to materialize in 2026, and that people would get more confidence around it, which would also lead to maybe some sort of a repricing. But overall, not very good year for BTC holders.
Yeah, I agree. I think it's interesting because there's a lot of other factors that make it seem a lot more bullish too. On the other side, you have institutions kind of adopting Bitcoin. You have countries that are denominating their treasuries in Bitcoin. I think Harvard owns $500 million of Bitcoin for their endowment fund, which is I thought was very surprising. But yeah, I guess ETH and Sol at this point are completely different beasts. I think there's been a lot of complaint from people from the ETH community talking about how there's no actual value capture, and it's just a lot of the value is kind of being flung out into the L2s or the modular thesis or other altcoins that kind of follow the price of ETH. But they also have somewhat of structural valuation issues, just them being very cyclical assets as well. But now, curious to know kind of what you think about it now that the cycle thing is out the window, and for your perspective.
I think for Ethereum, 2025 was extremely stressful. I know a lot of ETH holders that were losing a lot of sleep, especially beginning of the year. I think that drop to 1,500 was really stressful, and a lot of even long-term holders end up capitulating over there, couldn't couldn't continue the negative sentiment for too long. And then I think like what happened is that just the stablecoin narrative and Ethereum actually getting vocal leader like Tom Lee to take the position to actually help people subscribe to the Ethereum narrative. I think this leadership gap was a big problem for Ethereum because there was a lot of people bringing up the concerns, but there was not many people that were able to respond to these concerns and come up with a simple story, right? But then Circle IPO and all the interest that went into the stablecoin topic, all the regulations around stablecoin led people to kind of research more about the topic and realize that Ethereum is actually winning this stablecoin game, and then Tom Lee making this into a meme and suggesting this is like a ChatGPT moment for Ethereum. I think it brought back some positive sentiment to the Ethereum community, and then like it also led to the 3x then price from 1500 to 4700 peak or even 4900 peak, I believe, which was like all-time peak for Ethereum. And then I think after that, like Ethereum drop was mostly driven by Bitcoin drop. Like first half of the year, it was trading like with very low correlation to BTC. It had like its own path. Like first of all, it was dropping a lot while BTC was stable and even positive, and then like it had like a huge outperformance. And then if you look into the end of the year, it was actually dropping pretty much in sync with BTC. I actually remember like before 1010, like just for a personal allocation, I was kind of like doing some rebalancing, and I felt that market might have some corrections. So I ended up like converting like ETH and some altcoin holding into the BTC, thinking that BTC could protect me better in the market downturn. But then like the downturn ended, and it was pretty much like very similar whether you held like Ethereum or BTC, which actually like gave me even more confidence about like ETH going forward, because it performed relatively well in the downturn. Obviously, it cannot be well when you drop like 35%, but considering that relative to BTC, it was really small drop. Like it showed that the market is still like positive about the Ethereum story. So I feel like for 2025, Ethereum managed to solve some of the big problems, which is like the first problem is the leadership and having the opportunistic leader that also has like pedigree and vocabulary to sell this story to a broader audience. And I think that's what Tom Lee is doing for ETH as an asset. And then like in terms of Ethereum as a chain and its own narrative, I think the stablecoin being like the stablecoin probably is the key word to describe like 2025 crypto overall. Like if you would select one word to describe 2025, it would probably just be stablecoin. And in that sense, I think Ethereum is clearly winning in both like a balance perspective and in also flow perspective. I think since Genius Act, like there was 50 billion flow of stablecoin to Ethereum, which was probably like 10x more than the second largest competitor. I think Solana community tends to advocate that there is like a much more velocity of stablecoin on Solana, but if you think about this flow and balance perspective, and then where is this velocity coming from on Solana, which is mostly driven by some of the meme-related trading, I think Ethereum is really number one for the stablecoin narrative, and this really helped a lot with better market perception around ETH as an asset as well.
How about Tom Lee's decision to invest $200 million into Mr. Beast? Where do you think that lies?
I feel I don't have strong opinions about it. It could be actually a very smart decision. I think he's recognizing like the new trend, and this trend is quite obvious like for the last 10 years, and I think this trend would accelerate even further like over the next 20-30 years. Like some of these influencers are going to have outsized power. Like the old media is like slowly losing the influence. And I think that's clear to everybody. And I think this trend is just going to accelerate over time. And even if you think about the younger audience, like what Gen Z audience likes, I think it's unlikely many of them are listening to old media or like looking into the newspapers as a source of information. So I think he's betting on a really long-term trend, and Mr. Beast is probably like the number one choice to bet on. And to what extent he can leverage this to get extra promotion for some of his backs, I'm not sure. It's probably something that they've discussed. But if talking just about the Mr. Beast bet like alone, I think it probably makes sense without knowing like any deeper information, just directionally. But like whether it can benefit Tom Lee's backs more directly, I think it's hard to judge on that this early on. It's probably you can see many scenarios where it can.
Yeah, I agree. I think it's a very big experiment, like a very risky experiment, and I don't know. I feel like the influencer market kind of has a very high turnover rate. Mr. Beast is one of the few that has very good staying power. And I feel like that's like the goal is to kind of bring more awareness. I don't know if that correlates to bringing more buying power, but hopefully I think this is like probably a good 5-year, 10-year bet where the 13-year-olds that grew up watching Mr. Beast finally get some buying power when they're 18 and they've heard of Ethereum when they were, back in the day, and somehow they're a little bit more comfortable with the risk. I feel like that has pretty good downstream effects, which I feel like would be the case for the investment. But yeah, I guess like Solana is a pretty different story, right? Like I remember you commenting on kind of how they're positioning more as like a DEX, and this was like pretty evident from the Monad launch, if I recall. I feel like a lot of people have kind of different thoughts. There's a lot of people on crypto Twitter that mention that Solana is having like an identity crisis, and their foundation is kind of trying to decide which way works. For a protocol or for like an L1 at this stage, I feel like you should expect a little bit more concrete directions as to whether they're consumer chain or gambling chain or a DEX or going to RWAs or tokenized equities. But yeah, curious to know what you think.
I think like probably 16 months ago, everybody was thinking about Solana as an on-chain digital casino, buying kind of like a digital version of Las Vegas or Macau, right? But then what ended up playing out is that this casino has obviously has odds in its own favor, but it was just too much skewed against the user. So I think like some stats show that 98% of the meme coin traders were losing money, and obviously for any casino like to have sustainable dynamics, it also needs to have like more chances of winning. So I think this Solana casino thesis has to a large extent disappear from the market discourse, but then overall, like I do agree with this identity crisis comments. I think like Solana is somewhat in an awkward position right now, just because I would say like maybe in a similar position where Ethereum was 18 months ago, where Ethereum didn't know what its North Star is. It didn't have like a clear narrative, and it was somewhat in between Bitcoin and Solana. Solana at that time was having like amazing volumes. It was the hottest asset. They had like a huge success with meme transactions. There was still a lot of optimism about meme coins overall and these casino dynamics. And then BTC was a store of value, digital gold, and Ethereum was somewhat in between, like not having its clear narrative. I feel like now Solana is somewhat in between Hyperliquid and Ethereum in terms of positioning. I think after meme coins not being such an important market narrative anymore, I think they are trying to go back to the original vision of the global order book. But then if you think about like the successful order book in the crypto space, you usually think about Hyperliquid, right? Like if you think about like a fast, low latency order book chain, it's actually Hyperliquid at the moment. It's not Solana. So I think Hyperliquid managed to take over this narrative, and it would be relatively hard for Solana to take it back. And I think once you start pushing for going for more like centralization, lower latency, then it's also about like where do you draw the line. So right, Hyperliquid, I feel like banalized this discussion to some extent. They were starting like with 4 validators, and they're like, okay, so decentralization is maybe not that critical. Why do we even need to pretend? So I will do with 4 validators what you cannot do with your semi-decentralized chain. And I think now like you can even feel this identity crisis when you hear a lot of Solana people try to defend Solana by trying to suggest it's more decentralized than Hyperliquid, like the same way how Ethereum community was defending against Solana back when Ethereum didn't have like the clear narrative. So on the one hand, like you have like Ethereum that is winning on the DeFi stablecoin and capital intensive related stuff. On the other hand, you have like a Hyperliquid that's winning the order book narrative. And for the consumer apps, I think after what we see with Polymarket and a lot of this tooling becoming more mature, I think it's becoming more and more realistic that which chain they choose is not that relevant. I think like tools like FineXYZ, Glide, even Privy, and some others like are really making it less important which chain do you choose. I think most people that are interacting with Polygon, they never bought Matic to pay the gas fees, right? Like they don't even have the awareness that they are on Matic. And for a lot of these consumer apps, there is not as strong advantage as being part of like a composed ecosystem as for DeFi, right? Like for DeFi, I feel like it's still, you have a lot of advantages if you're sitting on the same ledger, and you have like this interoperability of collateral. And we've seen like some of the very successful examples like Itinabe, Pendle Loop, and in that sense, like I think DeFi is becoming a real mode for Ethereum, whereas for consumer-oriented chains, I think the real question is like, to what extent chain is even important now that you can have like these toolings that fully abstract the chain existence, and people are not even aware that they are interacting with a particular chain. So I think in that sense, like for chains that don't have like a strong DeFi presence, and it's actually very, very few of them that have like strong DeFi presence, like the consumer apps are likely just going to control so much more of the value than like the chain itself. And in this sense, like the leverage to a great extent is just on the app developer side of things rather than the chain itself. So in that sense, I feel it's a tricky position, but I think Solana team is always like extremely good at execution, and they are like they've been through several stress tests and always managed to come back. So I would definitely not write them off, but I do feel that there is like some exploration going on, and some of their strategies are actually very smart. Like the idea to bring all the assets to Solana, even if they are not listed on Solana. I think this is like the best thing you can do as a chain, and they are the first to actually deliver and execute on these strategies. So a lot of the things that they're doing are very solid. And even now, like I'm not sure, like from your perspective, like if you talk to consumer startup, what is the chance that it's Solana ecosystem versus some other? I feel like it's still
it's pretty high. It's pretty high that is Solana. I think the key difference is like theoretically, a lot of these things make sense. Like, for example, Solana has a lot of liquidity, it has a lot of transacting volume. like you would expect Perps to work well on Solana, or like DeFi to work well on Solana, because after people take profits, they you'd expect them to, put it into Camino. But when you're actually kind of in the trenches and you pull out some amount of money from a random meme coin that you saw in the news, like you're not thinking about Camino, you're thinking about your next fix, right? And I think that's like kind of a hard barrier to overcome. Same with Hyperliquid, like you're not going to see that many meme coins on Hyperliquid, even though I remember back in May, I thought, oh, this theoretically makes sense. I'm going to buy some memes to be a little bit exposed, and it just didn't end up working out, right? I feel like the thesis, I think Josip from Dragonfly kind of mentioned how each chain is kind of their own like nation. I know that we published like an article similar to that too. I think it makes a lot of sense. To be honest, like the chain really ended up being just distribution for the type of user behavior, rather than the type of users that it's incubating, which I guess like at the end of the day, the goal is to kind of abstract that all away, right? Like with Fun, with Polymarket, with like even EtherFi, like you kind of have these products where the chain is pretty agnostic. Like you can deposit from Scroll or EVM or anything like that. And I think that's kind of what makes me really excited about the end goal is now people care less about, okay, Solana is bad at this or Ethereum is bad at this, but picking out the best parts of each chain to actually make a very good consumer experience. I think that's probably something I'm most excited about going forward.
Yeah, but I think that also pushes a lot of chains to think about like what is the value that they capture, because originally everybody had this expectation, okay, like there is a huge amount of activity on the chain itself, like there is obviously fees, on top of that you have a lot of MEV going on, but it became more and more clear that even like control of the MEV can be pushed to the application layer, and now like when a lot of the things are abstracted away and there is not huge advantage for one application like Polymarket to be part of like a bigger ecosystem or to just exist on like a Polygon. To be fair, like except for Polymarket, probably there are not too many that popular applications, right? So the fact that Polymarket is sitting on Polygon and not on Solana, I feel like it didn't hurt them even a bit, right? And that's just because that there is like such a great tooling around Polymarket that fully abstracts away the underlying chain. And then like again, for what sort of like applications have to be on a specific chain, I think except for the DeFi having to be on the chain that has the broadest capital support, most of the consumer-related stuff don't have this sort of like a pressure, so they are very flexible in the choice that they can make. So in that sense, I think a lot of this conversation was also part of the 16 to 18 months ago, the part of the core Ethereum discourse, because like people were wondering about what's the value accrual of Ethereum if L2s are going to capture the MEV and so on. But I think like now this discussion is going to get closer to any other chain, because even for MEV, like even if somebody is sitting on your chain, like there are like now ways to control the MEV stack on the application layer. There are like also ways to fully abstract the chain itself. There are also not that much dependency in terms of like success of the product depending on like a very particular chain choice. So a lot of these discussions about the chain value accrual is something that most of the L1 tokens will have to think about. But I think the Ethereum community at the point of confusion, like I think Justin Drake had like a foresight in this sense, like because he already like at that time suggested that this is the future that everybody would have to face eventually, that you cannot just rely on the fee model to justify the valuation. So he was pushing for this narrative of a pristine collateral, which is I feel something that didn't pick up with the markets. I think right now like people are trying to push for Ethereum for the digital oil narrative, which is probably a little bit better, but it also didn't get good market adoption. But from Ethereum to Solana and many others, I think there is like a big open question about like how would they define like the narrative and positioning and which direction to take. And I feel like new chains are either product driven or like don't have any chance of success. Like if you look into Hyperliquid, right, like in-house product, and then potentially explore the chain and how much they want to actually invest in it. Even like the ecosystems that tried to go for strict incubation, like Mega Eat, where they had like a few projects tied to their ecosystem, it ended up most of these projects leaving the Mega Eat ecosystem. So unless you are the one building it, you actually don't control it, despite all the efforts. So in that sense, it seems that new chains would have like a lot of pressure to actually build useful product themselves, which is also more healthy rather than everybody just launching like a general purpose chain with, and then expecting somebody else should deal with the PMF concerns.
I agree. Yeah, I think maybe a hot take, but the duopoly of ETH and Sol is very, very difficult to break, especially because no one really knows how value is even captured at this point. So I don't know. Maybe we can include that in our predictions, but yeah, I guess like going to kind of like different altcoins, and I wanted to like step back and discuss what's been going on with these like more longer tail assets. I know we've been talking about it a lot as a fund, and you know, is there actually something fundamentally wrong with altcoins, and kind of what's the relative comparison? For me, I guess I have like two big approaches to kind of think about it. One is the supply of the number of tokens that people need to divert their attention to, and the other probably also comes from the availability of liquidity for like a given token, right? And I think the supply of the token was somewhat broken by like meme coins. The fact that there are so many different tokens that you have to focus on, and there's such a high turnover rate week over week, I think that definitely had a really big impact on what was supposed to be like alt season, right? I think a lot of that was allotted to meme coins. You saw outsized returns there, and then you know, if you're paying attention to it, you can get pretty good like mini alt seasons every week of different flavor. But also there is like some sort of structural maybe problem with how tokens are designed and how tokens are launched. I won't get into too many details because I know that you have your own thoughts around this, but I do think a lot of it is kind of stability versus greed, and I think that's like a really big theme of it. Like when you compare it to like IPOs, you have a lot of stakeholders in IPOs that are incentivized to stabilize prices for a given amount of time. I don't think you see this sentiment as much in tokens, and part of that is for the fact that like you might not believe in it, or the token itself might be the product, and there's no real reason to stabilize. You might as well kind of capture this opportunity, or you know, the product doesn't have PMF when launching, and you're kind of accumulating at that point. But yeah, I know you have your own strong opinions on this, and we'd love to hear.
I think there is a lot to say about these topics. I'm sure I'll forget something, but I tend to agree with what you said, although I would say that memes were the reaction to the structure of altcoins rather than like an isolated event, because I think to some extent the way tokens were structured were the problem. Then another thing to address is like that oversupply of the altcoins itself. Like I think especially like consider like the bubble of funding in 2021 and 2022, a lot of these tokens were coming to market in the last 2 years. And then like combine that with the poor structure of launching tokens, you end up with a very negative result. On top of that, I think the third factor is that there was also very poor practice in a sense that, let's say in other industries, if you have like binary outcome, you either succeed or you fail, right? Like if you succeed, you get acquired, or you maybe like even do IPO. If you fail, you get written off, right? In crypto, there is regardless of success or failure, people just issue token because like that's the thing that this industry does, right? Like, and then oh, okay, I don't have PMF, I don't have any success, I don't have access to capital. Oh, why shouldn't I issue token, right? So I think to some extent this was probably the mistake or responsibility of a lot of the teams and VCs that pressured like teams to launch token regardless of the situation. And this is like something that this group of stakeholders, like VC group, like everybody should take responsibility for this part. But then like in terms of the token as a vehicle and how tokens are structured, like there are a few parties to sort of like blame to some extent. Like teams were also looking for more optionality, right? So they often had like these double vehicle. I think DYDX was a famous example, right? They launched the token and then they like fully capture for the first year like all the fees, which was the year when they earned most of the fees, because that is when they did the trade mining. So it was like essentially like an indirect mechanism. Trade mining for DYDX was the indirect mechanism of selling token to the community and getting money to the equity. And then once they got like a few $100 million in the equity company, they decided to actually introduce value accrual to the token. So they basically took all the money for the equity and then left token holders holding the empty bag until the point where the volumes dropped. And then they were like, okay, we are fine to give this now to the token holders. So there was this issue from the, again, insider perspective, where they were looking for having this optionality and having like the value accrual. And often you have like positive events on the equity side of things that don't reflect at all on the token side of things. So tokens were structured in a sense as some sort of like a junior tranche, and then you didn't have too much benefit and guarantee. And I think also not to just blame everything on the insiders, like including VCs and teams. I think to some extent it was the result of the market environment, with SEC being like very much aggressive in terms of what you can do with the token, and to some extent the regulatory environment was also incentivizing launching stupid tokens that don't have much value accrual rights, because this was the only way you prevent SEC knocking on your door. And in that sense, like you were the safest if you were launching the meme coin. But blaming it all on just the regulatory environment and not accepting responsibility for like crypto stakeholders, I think would be unwise. And then on the CX side, I think they were forcing this sort of like a low float dynamics, which I think is still somehow the playbook that is being out there, even though like everybody is now at this point aware that low float is just not sustainable. But I think what is the reason why CXs are so stubborn about like the low float implementation? I also wouldn't be able to tell. I do remember that back in like 21, there was like a short period where everybody in the market was talking about fair launches, like tokens should just launch, altcoins should just launch without VCs. And this, I think, extended also in the recent meme coin hype. But I think even back then, like there was this expectation that insiders should have like very limited control of the token, right? And I think this also sets sort of artificial magic line that insiders cannot exceed 50% of the token supply, both team and VCs together, which I think contributed to some extent to inflating some of the token valuations in the primary market, but then also for the VCs to play along with this low float game. To some extent, there was a reason, because that was the only way how they can defend, how VCs can defend like the high token valuations that were given in the primary market. But because as soon as you have like the actual more reasonable float in the market, you'll see how hard it is actually to maintain like 100 million market cap, 500 million market cap, and 1 billion market cap becomes super hard. But with low float, you can get to 1 billion FDV like with less effort. I think at least it used to be like that, right? So I think for low float, I think these dynamics were to some extent the result of the fair launch that was narrative that was imposed early on from the community. Then it was also part of the way how VCs and teams try to defend like some valuations. But I think also I would even say like the biggest responsibility lies with CEXs that are enforcing this rule like no matter what. And at the end of the day, like there were some iterations, like even meme coins were iterations to the failed altcoin structure, like into the low float game, and it was again back to the fair launch narrative. But then you ended up having like more extraction and even less fair environment for many participants than the altcoin itself. I think now the most recent iteration is what MetaDAO is trying to push, but I think MetaDAO is trying to overcompensate for the token holders and just put too much restraint on the founders, which is why I feel a lot of the great teams are probably not going to go down this path. But at the end of the day, like we probably need a more balanced solution that takes into account all the counterparties. It is just that if you think about the key stakeholder groups, like from CEX, VCs, teams, and the secondary token holders community, except for CEXs, every other stakeholder group is extremely fragmented, and there are just too many voices and not like one clear entity that is taking the leadership that could actually push for the change. So I feel bottom up, I'm skeptical to what extent we can actually make the change unless the entity that has like the most leverage, most power, and also most concentration, like or actually stakeholder group that has most concentration, which is CEXs, decides that low float is not the playbook that benefits any of the stakeholders. And until this is done, I think it's hard to see the market recovering. And I think we also need to change the way how we approach tokens, and launching token for the sake of launching also is something that is just going to create the perception that token is for the lemons, for like shit coins, right? And it could just be rejecting for many quality companies to go with the token, because now, especially when you move more towards consumer and application layer, whether you have token or not, it's not that critical, right? Like you can think of many crypto projects that are actually can operate in the same way without token, right? Like Polymarket now doesn't have any fundamental need to issue the token. They can just remain like an equity story. I think this would be the case for most of the applications because the token was really important if you're doing some infrastructure, like if you're launching chain. But if you're a consumer layer, like if we keep making tokens the lemons only, like I think this is a huge risk that it could be very much rejecting for quality projects to go with the token, because for quality projects there is always like optionality. Like if I have good revenue, a lot of success, why do I even have to issue the token if I have like the PMF, right? But then most people are treating the token as the product, and without PMF launching the token and trying to do a lot of management on the token side of things, which is another problem. And the final problem is obviously the cycle itself. I think we are soon going to exhaust all of the projects from the bubble cycle, and then it should also become less pressure on the supply side. And I think that the markets in general have the tendency to self-regulate, and over time, like I feel that the problems would be fixed. It is just like what sort of time it is needed. And I feel like with the bottom-up version of the plan, I think it might take quite some time. And if you have like a top-up initiative from some of the leading CEXs to take the leadership role and set like a better rules, I think I'm bullish that we can even like resolve these problems in short term.
Yeah, I agree. I think I somewhat tend to disagree on the consumer apps not necessarily needing tokens. Uh, I do agree, like infrastructure is probably like the biggest use case right now that we see, but I also don't think there has been enough token experiments yet for us to really know. It's been same playbook over and over again, and I feel like tokens are very powerful. Like I recently I was looking into Venice. I think that one had really interesting tokenomics on like computation. I was looking into Cled, and I don't know. This is not much of like a tokenomics play, more like kind of they got screwed over by Believe, and now they came back, and now they're building something meaningful, and people want to back it, right? You mentioned MetaDAO. Hype is obviously top of mind. But yeah, I think like there's a lot of cool things that you can do, and really I think the strongest point that crypto right now can bring to consumer apps is just game theory that you haven't been able to execute. Like you have literally the strongest driver for the modern generation, which is money, right? And people aren't actually programming it into user acquisition or kind of the different mechanisms around how people interact with the app. And obviously like right now, I don't think I'm smart enough or creative enough to come up with something super novel, but I hope someone does in the future and actually makes a really cool use case from tokens. I think DPIN like on first look is probably maybe a step in the right direction. But yeah, uh, I guess like going through more on kind of how the the year unraveled for you, like I'm sure like you see very different things that I see on my Twitter feed and kind of the media I ingest. But for me, like it was, RWAs and AI agents and DATs and perps and prediction markets and, stable coins kind of overlapping this entire cycle. We went through a decent amount of narratives actually this year, but
I think maybe
curious.
just before we go into some more niche ones, just to follow up on your comment, I actually agree with the caveat you gave. I think like you have a lot of unique design space for game theory with tokens that you just don't have with any other like alternative instrument. And I think in that sense, like the tokens are really promising as a technology and also as a game theory design mechanism. And there are a lot of unique things that can help you accelerate the growth if you use tokens in the right way. I'm just
Yep.
afraid that if we create the perception that only lemons are launching tokens, that it might be, for instance, if Polymarket had launched token 3 years ago, where would they be now? Like, I think that's also interesting situation to think of
Yep.
whether the token market would be as rewarding for them, because now they obviously can extract a lot from the equity market. And should they issue the token 3 years ago, they wouldn't have this opportunity, right? And to what extent like the crypto would give them like 9-10 billion valuation for like the volumes that they have right now and the story that is being told right now. I'm also not sure, but in that sense, like there is the competition from the equity market who has the deeper pockets. But I do agree that there would always be like certain scenarios where you're just better off with the token, and if you can clearly signal that you are not the lemon and that you actually have like potential for PMF and that you are more robust, I think this is extremely powerful. And how you signal that you are not like the lemon, I think that's another question, but the good teams probably can make an effort to make this clear. It is just that right now they are not best practices, but I think there was even like a few good initiatives like MetaDAO in that sense. I think is putting like the emphasis on the right thing. I think there was like a Blockworks
Yep.
initiative. I think Morpho was also trying to take the lead and set up like the example by
Yep.
fully focusing on the token and disregarding any other vehicle. So in that sense, I do hope that the good teams would try to do more to be more transparent and to help like clearly suggest what are the lemons and what is the high quality, because I also think that there is a unique design space that you can only exploit with the tokens. And I think like what you mentioned, like for reflecting on the city, and that is also very much adjacent to the altcoin topic. I think probably in December, like you could see a lot of the reflection posts, right? That's the point of time where everybody is just writing reflections. I'm not sure what was the main reflection topic on your line, but on mine, I think people are just talking about the altcoin problem and related
I
stuff.
actually blocked that keyword, reflections or 2025. I just blocked it.
But did you see the article from Dagi from Figment Capital?
Yeah, okay, yeah, I saw that one.
Crypto is there. Yeah, that one got a lot of attention. Any thoughts on that?
I don't know. Are you talking about the one about survivability? That's the one you're talking about?
I think that the core theme was that he basically just claims that crypto native is dead, that crypto is now like just part of the technology that integrates with others, and that if you are crypto native project or VC, that you have like low chances of survival, because like what I think to some extent I tend to agree, and to some extent I don't. I agree in a sense that in 2021, like people were just thinking about Web3 as a purely isolated alternative to the existing world, and we should build everything from social applications to data storage to cloud to finance to anything you can think of should have its own Web3 version, right? And then often even gaming, like people were trying to push even like fully on-chain gaming, like gaming needs to exist on-chain, right? Like everything you can think of, people would just say, okay, we need the decentralized version. And then when you ask questions why, like usually for most of the ideas, there was no like strong and robust reason why. People were just like, okay, this is the thing, this is what people are doing. And to that extent, I agree that Web3 and just launching everything in its own decentralized manner, it's like relatively obsolete. But to some other extent, I also feel that a lot of successes start with crypto native audience, and then like some of them manage to expand into a broader base, right? Like even Polymarket, Hyperliquid, Ethena, I would still put them into like a crypto native play that eventually in some instances like remained extremely successful within the crypto native world, and in some instances even managed to break into the mainstream, like Polymarket, right? Like judging from the hindsight and saying like the crypto native doesn't make sense because NFTs failed. I think it's not realizing like things like Polymarket that also started as very, very crypto native. Even like stable coins in the beginning, it was only crypto natives that were playing with stable coins and using stable coins, and then like eventually like they managed to break into the mainstream. So in that sense, I tend to feel that it was too harsh on the crypto native as a concept. Because I don't think that the crypto native equals the Web3 dream overall. But then I also feel that he is right to describe that the ideas of decentralizing everything are somewhat obsolete. But then I also realized Vitalik recently double-clicked on decentralizing everything, and he still doesn't give up like on this idea of everything should have its own decentralized form, but I think it is more like a wishful thinking, that's something that can have like support from the market.
Yeah, I think the thing that I tend to notice, or at least for these 2026 outlooks, is that these are more wish lists than I feel like actual predictions, and maybe this is some sort of projection on Doug or whatever. But I mean, like you have. Even last cycle, you have like Ondo, Centrifuge, Maple, like doing all these like fintechy, institutional kind of direction. But then at the same time, you have people putting money into Budcoin, right, and Fartcoin. So I don't know. I think it's very crude to say that it's mutually exclusive. Like it has to be one or the other. It's just a technology, right? And people are gonna build whatever there is demand for. And I think at the end of the day, like. There is a subsection of people that are very like cyberpunk. There is a subsection of people that are very gambly. And people come to crypto for that, and there will always be an audience, and the cycle proves like time and time again. I feel like I disagree in that the kind of golden lining for crypto is copying what you see in Web2 or like equities and then bring it on chain. I think that's what happens a lot, and that's also what happens with tokenomics, right? Like you have governance, you have buybacks, you have ICOs. I don't know, it just feels super copy paste, and there's no real like kick to it. I think like innovation comes here and there. Like for example, I think Ethereum was huge. I think perpetuals, like the idea of how perpetual mechanisms actually done was a crazy innovation that actually took things one step further and actually made it better. But in the fact that like there's a huge design space for crypto and a lot of things that you can do to better legacy systems that we see today in Web2, like this can kind of expand to like every single vertical, in my opinion.
Yeah, agree, makes sense.
But I guess talking about Perps, I feel like this is like a really interesting thing to talk about. I know we've talked about it a lot internally, and I've been pretty vocal about Perps for the past, however many months or years. I feel like that is like one of the really interesting PMF that we have found in crypto before, kind of died out, and then found again through Hyperliquid. Curious to know like how you think of whether like these kind of perp protocols like die every year and then a new one pops up and it gets to some insane valuation, and then they die again, or not. Because I do fundamentally think like perps are super addicting. I've had days where I was just looking at charts just because perps were able to capture me that much, and I'm sure so many of people listening to this would agree with that. But whether the venue changes or not, I think is a bigger question that people have in mind.
I think you might be having symptoms of gambling addiction, but for the perps, I feel like have some PTSD for sure on the perp market, because like I think especially like in 21, 22, 3 cycle, like I think there were like 50 to 100 perp startups like back then, and pretty much all of them failed, or maybe failure is too strong of a word. Some of them had like market presence for a while, but looking from today's perspective, none of them succeeded in a big way, and we had like many waves of projects having like a huge volume prior to token launch, and during the while the token price is relatively high, and then after that like end up performing like terribly, and the reason why it was so much correlated with the token price was that a lot of the activity was driven by the trade mining and the ability to earn the rewards by trading rather than like real trading. So in that extent, to that extent, I witnessed so many of these like that. I always feel that there needs to be like more proof of organic traction and adoption for some of them to be able to claim like real excitement. I think for Hyperliquid, maybe like I think there are like multiple versions of why Hyperliquid succeeded, but I think the simple one probably makes a lot of sense to some extent. Like until Hyperliquid obviously started with Jeff also with market making background, and I think he was also contributing to good liquidity on the exchange from day one. He obviously played very well the community aspect, but Hyperliquid was last 2 years probably the only exchange where you can outside of C axis where you can trade reasonable size without any problem. And you also, if you look, a lot of the US users actually cannot access perp market on CE-axis because like Coinbase is not doing that, and all of the other one perp exchanges are just Asia-based, and typically like most of them like also don't accept the US customers. So I think for a lot of there was a huge group audience that wasn't served, and there was obviously like a clear demand for perp trading in the crypto industry. So I think there was like to some extent regulatory arbitrage that Hyperliquid performed, because I still cannot persuade myself that the user experience is better than like CX perp trading, but then there was obviously like a clear regulatory arbitrage, and this you can argue attracted some organic user base. Obviously, like they played the token game very well and managed to reward some of the most loyal members and community that became even more sticky after the token launch. So yep, they definitely have like a better, more organic traction. And I think if you want to look only for one metric to determine whether traction is organic or not, I think people should pay attention more to the open interest than the volume itself, because open interest is a little bit harder to fake. Although like I do feel that there should be like a little bit more proper data analysis, like to determine to what extent some of the activity is organic versus not organic, because there was also a lot of talks about like people doing huge amount of trade volume just to qualify for the airdrop on Hyperliquid, and to what extent this is like driving activity, what percentage of the activity is this. I think it's hard to answer, but Hyperliquid definitely played the game better. So it does seem that the 3 years from now they would still be like a relevant player, and it wouldn't be like some of the previous cycle short-term metas, like a perpetual protocol was very successful at one point of time, then DYDX at another, and now like none of them is having a meaningful volume. It seems at least that the risk of something like this happening for Hyperliquid is extremely low. But then for the other ones that are looking to compete with Hyperliquid, I feel like very skeptical, and it seems that it's still mostly driven by the mining and farming the tokens. So in that sense, I do feel a little bit skeptical on the broader perp space, and I know there is also a lot of excitement about like perps for RWAs. I don't have like a strong positive opinion on that, but overall, like except for the Hyperliquid, I feel a little bit bearish that 3 years from now, like many of these perp exchanges will actually manage to survive and remain meaningful or significant market participant.
Yeah, I guess like I don't know, when I try to think about longing Google on trade XYZ, I feel like it's very hard. I don't really have an edge in trying to see like where Google goes up or down, but I feel like because I spent so much time on Bitcoin or thinking about Bitcoin like in the shower before bed, I feel like I have a bigger edge, and then I'm more willing to do it. But yeah, I agree. Like equity, I feel like is a lot slower burn than it is for just regular perp adoption. I think there.
I think also like in terms of the funding rate mechanism, to what extent this mechanism works well for less volatile classes, like it's still something to be determined. I think eventually, like if you go through the bootstrapping stage, I'm sure there is like certain market equilibrium, but obviously bootstrapping is not that easy. Like I think after Hyperliquid launched some of the perps on stocks, like there was like a relatively huge, like for instance, you expect on S&P 500 maybe annually to earn 7 to 10%, and then like I think longs on Hyperliquid at some point were paying like I don't know 7% in funding fees to annualize to hold an asset. So perhaps in that sense, like at least the bootstrapping would be very hard, and I think if somebody can bootstrap, it's probably Hyperliquid. But to what extent this is realistic, I'm also not sure, and so far I'm not sure what is the current state of the market in terms of the funding rates and whatnot, whether they are more balanced. But I remember like in the first month it was like shifting from positive to negative, and then like even double-digit figures for the asset class where you expect like 7 to 10%. It's really a little bit high, but then like for short-term trading, if you want to do like a huge leverage, maybe there is still a good product market fit, even though there is again like the debate like is there something like, is it possible for you to achieve the same objective with CFDs that already have like a good liquidity versus like a bootstrapping whole new instrument? I think that's the key question. So whether to that extent Perps can extend beyond the crypto asset where they are pretty much the 99% of financial derivatives that are used for both leverage and hedging, whether they can end up becoming like a key instrument in other asset classes that already have very much established like financial derivatives and tools for leverage and hedging. I think that's very, very far-fetched, but it's also to some extent sounds more like a wishful thinking than realistic opportunity.
I don't know. I think there are certain times, periods of time where I think back and I wish that it existed. For example, I don't know if you remember like the NVIDIA earnings call. I was super bullish on NVIDIA, but I have money locked on chain. So like, what am I gonna do? I can't buy like call options on Robinhood because, you know, I guess like if I don't have access to capital off chain, right? So these are like one of the few cases, and I feel like a lot of it has to do with like I guess a general tailwind for that is if Bitcoin starts very closely tracking other equities assets, and you know some attention is diverted to equities, then you see some people feeling that edge. I think like regardless of funding rate or not, I don't think a lot of traders are that sophisticated to think about, oh, I get like minus 7% a year on funding rates. They're thinking, oh, I'm gonna get 50% in 2 days just from this trade, and I think that's just kind of like where the biggest use case is.
I think I agree, but I feel like this is more of a problem of crypto people having access to capital markets and more direct access to capital markets, and this problem can be resolved in multiple ways. But I feel like it's also one of the key problems right now, because even if you look into stablecoin versus fiat, I feel like the biggest gap that stablecoins have compared to fiat is just access to investment opportunities. Like stablecoins are still relatively tied to crypto endogenous investment opportunities, both on the yield and on the trading investment side. Whereas like with fiat, you can pretty much get T plus few days access to any market in the world. So in that sense, like whether Perps are the ones solving this problem, or like more tokenization and native issuance of some of these off-chain assets on-chain, I do feel that probably it's the second group, and I think to that extent, like you also see a lot of these traditional broker firms starting to accept stablecoin deposits. So it's now like also very easy to go from stablecoin to trading stocks on Robinhood or like some other, even like interactive brokers, which is much more traditional than Robinhood, is starting to do like stablecoin acceptance. And you obviously then have like the second force where some big players like even Nasdaq are exploring issuing assets on chain. So in that sense, I think that this gap of the stable coins that have like a lack of access to capital markets is going to resolve via other means. But yeah, I think for crypto natives, there was always like some trouble accessing capital markets. I think for some people, it is also because they have locked most of the money on chain. But for some people, I think there was also no alternative, right? Because a lot of the stablecoin holders are in some countries that don't have easy access to the US stock market, right? So for them, now that they have like alternatives to invest in the stock market, is that extra bearish for altcoins, it's also something for people to think. So this bridge, once it's out there, like would this divert some of the attention from altcoins even further? Like might be a risk that we haven't thought of.
Yeah, I agree. I think I kind of want to move on to prediction markets because that's like the other side, right? There we had perps and we had prediction markets. I feel like in terms of consumer, these were like the biggest promises. There's like a crazy duopoly with Kalshi Polymarket. I mean, it's been done in the past, Augur, Hedgehog, you name it. But I have like an inkling of doubt for like this duopoly being as strong as it is. Like personally, I know this is kind of a hot take, but the moat that people say is a moat for prediction markets that are standing today, I don't think is as strong as any other product in the industry. I think you can kind of see it with, for example, Kalshi. It takes a lot of volume from Robinhood, and now that Robinhood is kind of creating their own prediction market platform, you see that big moat being taken away, and now they're also facing a lot of regulatory scrutiny, which was kind of their wedge right into sports betting, was the fact that they were able to reg arb this whole thing. Polymarket, on the other hand, I feel like the moat that they were trying to grow was through very similar to like Hyperliquid, where they're trying to go for like the builder codes, and then they're trying to go for like more specific and niche markets, like the crypto audience, mention markets, politic fanatics. I feel like that was a difference, which I think gives them a slightly upper hand, but I do think there is like a room in the market for another player. Opinion Labs just came out of kind of nowhere and was able to either beat or compete with Polymarket on volume the past couple of weeks or months. So I don't know. I think this kind of shows to me like there's a lot more room for innovation, and going for like this regulatory clarity route from the get-go. It limits the product a lot. I don't know how you think about it.
I think I tend to disagree a little bit on this one. Like I feel yes, compared to Robinhood, Kalshi might not have much of a moat, but compared to like other startups, like they probably do. But I guess like Robinhood or any that could be in a similar category as Robinhood, that has like a end user ownership that owns the relationship, can always like introduce their own product stack instead of like integrating the third party, especially like I don't think that it is too technically challenging for them to build something like prediction markets. So in that sense, like this might be like maybe more of a pressure for Kalshi, because their strategy was to heavily integrate with big players and then play this regulatory game. But for Polymarket, I think it's they didn't go for this approach, but for what you mentioned, like more of a community play and like actually owning the end user relationship and breaking into the mainstream via their own channels. So in that sense, I feel like Polymarket, the position is more robust and more strong. But then like to what extent like there is a room for a new player to make some modifications on the Polymarket logic and break into, I think it's a little bit hard. I tend to think of it from a similar perspective to when Uniswap was out there, and then there were like so many others like trying to experiment with different logic of the bonding curve and so on, and then like none of them managed to break into their liquidity mode and whatever. And I feel like this might be the trap. And now like probably there are like more than 100 prediction market startups. So for those that are trying to modify like a little bit of the underlying logic and go head to head with Polymarket, I'm a little bit skeptical, but I feel like there is an opportunity to also go from a different angle, maybe to go for prosumer audience and target very specific group of users that are the most valuable users, and even try to offer like some sort of like support for both Kalshi and Polymarket and abstract them away, and then eventually like you can choose to do whatever you want as long as you end up owning the end user relationship. But going directly head to head, I feel like it's not the best strategy, but going like with more innovative angles and trying to integrate on top and then build unique experiences. And once you build the trust with the user and own the user relationship, then you can do whatever you want essentially. And I feel like if you think about like some other angles, maybe on the retail side, probably both Polymarket and Kalshi are going to customize their experience to be very retail friendly. Yep. So I feel like you would have to try to play with some other variables. For instance, like do you want to make these markets more of permissionless and driven by certain creators, communities, try to go for more social angle and stuff like that, like what Polot Fun are trying to do. I think these are the interesting experiments that are worth exploring, but I wouldn't say they're competing with Polymarket. They're just going for a very different user profile, and very different user behavior would make them successful. So in that sense, I'm more interested in these sort of like ideas that are taking innovative approach and try to think about new user groups. But for going head to head with Polymarket, I think it would be very hard. And even though like the volumes are still not that significant, I think Polymarket managed to enter the mainstream culture. Like now every now and then when I listen to any sort of like random podcast, I would hear like Polymarket being brought up as a reference point, right? So in that sense, like I think they have two channels. One is like the volume itself and the sheer amount of volume that is being transacted on the platform, and the other one is basically like the media value of the Polymarket and the information value of Polymarket. So I feel Polymarket is in a very good position over there, and when it comes to regulatory arb and how long or actually regulatory moat and how long Kalshi can maintain this with this 2B2C approach, I think that's a little bit more subject to a more risky position than what Polymarket has.
Yeah, I think it'd be interesting to see how like the geography aspect plays out, right? Like prediction markets are a very big part of it is just investing in culture, and cultures are so vastly different from each other depending on the country, and I feel like for example, like I remember seeing something from like the head of growth or the CMO at Uber talking about how they actually penetrated the Indian market was to actually have taxis come instead of having like the typical Uber structure, and as a result they had to completely change the product offering for depending on like the culture that people are used to. I feel like this is a lot more emphasized for a product like Polymarket, especially because it is culture, right? Like at the end of the day, you're betting on culture and kind of how things play out. And if if you're in the US and the first thing you see is like cricket, like you're not gonna bet, and that should be like the North Star metric of these products is get the user to bet. Like that's like the core function, right? And then, or if you're in Europe and you see like American football, like maybe you probably won't bet on these things. So I'm curious to see like how that unfolds, and I think that's like the marginal benefit that would actually like push one or the other forward in this duopoly.
I agree with this. Like I feel like you're on point. Like because a lot of the content on Polymarket is still curated with US centric user in mind, and in that sense, I think there is like some opportunity over there. I also like your piece on prediction markets where you mentioned like how underappreciated it is that prediction markets help you single out certain event because like suppose you want to bet on certain event via betting on stocks, right? Like there's so many variables that are in this equation for stock prices that you can never hedge out only like exposure to all these other variables so that you can have like a pure vanilla exposure to the event that you want to bet on. So I also appreciate like this insight because I do trade the prediction markets often with for this reason, like because they help me like single out only one variable that I'm looking to bet on, and I don't need to think about to what extent market has priced in this variable in the stock prices or in BTC price. I can just do it, like express this view and opinion more directly. Having said so, like what was your recent polymarket bet?
Let me check. Oh, I'm scared. I think it was like I know I bet on the Fed's market, the rate decreasing. It's super boring. It was it hit like 50% last time that they weren't gonna decrease rates, and I was like, there's no way they're not gonna decrease rates again. So I actually put decent size into it, and then ended up working out. But it was a gamble, honestly. Like thinking back on it, it was completely a gamble, and I had no like based opinions. But I do a little bit of sports. I feel like not a lot of people do it, and if I want to really gamble, then I go for the mentioned markets. I don't have an edge, but I feel like I feel like there's some intuition that goes into it, which maybe that's how they get you. But I don't know. How about you? What's the most exciting prediction market bet that you won?
I think for me, I'm less. I'm trying to go with thesis into into prediction markets. So I usually like do geopolitics stuff, and for sports, whenever I do sports, I lose. But for geopolitics, I usually like have a good hit rate, and I think the most recent one was. It's still not closed. I think closing end of the January, but I played like I think it was about 10 days ago or something like that. I played it. Israel is not going to bomb Iran, so that it was a good probability. And I had the thesis. Like I always like to think that I have thesis, but it's probably just making yourself comfortable with gambling. But I was just thinking that. It is not in their interest to bomb them because that would like divert attention from hatred towards the regime to like a foreign enemy, and they were anyways like hated within the borders. And last time they bombed Iran, it was like the peak of popularity for regime that was in fall. So like it was actually helping the regime stay in power and get popularity. So I felt like. Just by following their interest, they should not be bombing them. And just if the house of cards is falling apart, you just don't mess with it. You just let it fall. So I put like a decent size on that, and it was I think around like 50%, 50-50.
Oh.
But I felt like it's a good thesis bet.
It feels like you're doing TA analysis on politics. That's what it sounds like to me.
But geopolitics I like to bet on, and I feel like I can develop some thinking about it. And sports, I feel like whenever I bet on sports, I lose. So.
Me too. But I feel like that's kind of what makes it fun and kind of what gets you. And honestly, like there's a good split between people who want to make money on prediction markets versus people who think that they want to make money, but actually just want the thrill. And I think I'm also pretty interested in how that plays out with like leverage products and kind of like you see like Gondor or like I think SXBet is like a pretty big parlay one, though it only pertains to sports. But yeah, I'm pretty excited about the design space, and that's my thesis on it. If there's room for innovation, I think people will innovate.
I agree.
Yeah, I guess we can go into kind of like predictions that you have for 2026 or things that I guess this is like your wish list, but what do you look forward to?
Wish list or prediction list?
It's hard to say for me, but
I think let's call it predictions. I feel like I think BTC USD up for the year. Then eat BTC up for the year. I feel like
Okay.
BTC up mostly because of market over-indexing on the risk, not because of like some positive catalyst.
Yep.
And Ethereum up, I feel like more for the sake of positive catalyst and compared to BTC. I think prediction markets, I feel it's going to be more sustainable dynamics than some other crypto metas, like compared to NFTs and some other things that managed to capture market attention for a short time. I feel like this is the sustainable one, and that we still didn't have like a real exponential growth that these markets could have. On the perp exchanges, I feel except for Hyperliquid, most others are going to die out in volume over time, including some of the recent launches. I think for prediction, like maybe wishful thinking, this one, like that the token structure and related problems would be solved in 2026. But I feel like in terms of not wishful thinking, but prediction, I feel like the 2026 would probably be the last cycle of where we see the results of the previous bubble in funding for the token. So we should have like more reasonable supplier pressure for projects to launch token overall. My wishful thinking is that exchanges would take control and leadership and like top down, like implement some like more reasonable rules, but not sure whether I can put this one into the prediction. I think like prediction, we see big moves from some TradFi and big tech players that probably it's very hard to clearly say what this could be, but I think at this point it's already like you could say 14 months that some of these players are actively working on crypto strategies. So I think now it's stage where they should be launching the initiatives. There was a lot of talk about the tokenizing products, issuing products natively on-chain, launching new sort of products on-chain, offering like some stablecoin integration with crypto opportunities. So I feel like even from both big tech and traditional finance, I feel like we should see like some big moves, and we should have positive reflection on overall crypto industry, regardless of which chain they choose. I think stablecoins keep growing. Not sure what percentage or what amount of dollars, but the easy prediction just that directionally they keep growing, and that this disproportionately still keeps going towards Ethereum, where Ethereum even further establishes like itself as a stablecoin hub. I think 8-9 prediction, I already don't know, like growth in neobanks. I think neobanks have like a very good product market fit. Ether.fi is obviously like doing very well on that end. They had like a great pivot into neobank product. They now like serve probably number one, serving like a crypto native audience. There is also Reddit Pay that is serving like a different group of audience for focus more on Southeast Asian market. Both of them have a lot of opportunity to grow, and then there is a lot of others that are coming to the market that would probably try to grow some new segments. Then I think like explosion in stablecoin B2B payments is also something that we would likely see, especially with better regulations. And I think this was also the foresight that many people had like last 12 months, and they've been working towards this in the last 12 months. So we should see that more realization on that end. And then I think, let me see, I had some notes like to cover some predictions. I feel crypto IPOs can still continue this year, and probably we'll have some interesting, good IPO performances. Like overall, this IPO year is probably going to be very solid, and some of the crypto equities going public, I think some of them would have like very positive unlocks. I think RWA Perps would be underwhelming, and chains losing, apps winning. I think that's going to become even more clear of a trend in 2026.
Okay, so I can go through my list. It's definitely not as long, but I think some of it is anecdotal. So I don't know if you saw like the whole Claude thing going on, Claude Code. I think that actually has a really big impact on crypto. I think there is like some sort of aspect on consumer applications or just kind of experiments going on, and a lot of experiments in crypto have like a very quick rise and a very quick death, and as a result, people are going to get better at iterating on products, mechanisms, token designs. And I think at a certain point, we'll find a healthy and sustainable product or whatever it may be in the market, and there's going to be rapid improvement with crypto. Another thing that I see is kind of more interesting, like DeFi primitives coming out. I feel like we've stuck to the basics and have done very well. I want to see at least like better products that somehow increase borrow rates so that my yields get better on chain. But we'll see if that happens. But yeah, I think maybe to supplement that, we'll have better opportunities to allocate into exogenous yield. Another prediction I have is something that we talked about. Is better game theory altogether with different products in the crypto space, whether it's infrastructure, consumer, or middleware. And I guess lastly, kind of piggybacking on the B2B payment side, I'm pretty bullish on payment stacks working out well in the US. There is like a bigger arbitrage opportunity every day from merchants all around the world. And I honestly feel like the gap is just getting bigger and bigger. One really good way for the US to capture value here is to enable better like international payments, cross-border payments. And there at the same time, there is a lot of companies that are kind of popping up now to kind of support this. Few in YC batch as well, I think are interesting. So yeah, I think like the multiplication of these two factors probably is a good tailwind for the US B2B payment side. But yeah, obviously I agree with the stablecoin sentiment. I disagree with the RW8 perp sentiment. I think somewhat I'm still bullish on it. But yeah.
And what do you think was the main flex for crypto people in 2025? Like, because I realized like every time we have like a new meta, like the flex of crypto people changes. Like it used to be like I'm a DeFi farmer, like I'm a NFT collector. I have BFIC, my PFP. Look at it. What do you think? What do you think was the flex 2025 for right now?
Oh, I think there's two, and I'm so heavily biased here. But one is like how much airdrop you got from Perp Texas. I feel like that was probably one of the most asymmetric bets that you can have in crypto, and it shows a lot of insight. Another thing is a Hypeo. I really like my Hypeo, and I thought the community was like one of the best communities, even compared to like last cycle NFTs. So that was a big flex for me. Yeah, how about you?
I see.
What are your thoughts?
I feel like considering like that, especially altcoin market and BTC underperformed. Like I think a lot of the flex that we saw from crypto people was that they started to invest in like robotics and stuff. Like now the cool thing became like to tell others like you're investing outside of the crypto, like you made money and taking it away. I feel like this flex is also showing the state of the crypto industry to some extent in 2025. And I feel a lot of smart people, when they want to flex, they also like to suggest that they are writing without AI and using AI for everything else in their life. I think these are like some of the nuanced flexes that I realize people like to make.
I'm okay with that flex though. I'm okay with that. I don't want to read more AI stuff.
All right. Well, thanks to everybody listening/watching, and yeah, I think me and Joy will come back in this format again, maybe with some external guests, but hopefully everybody enjoyed listening, and until next time, goodbye.